Good morning, honorable members. How is everybody?
Morning, Mama. Everybody.
Oh, kau khona wokumuntu khona.
Okay.
No, morning, honorable members. As we have said in our last meeting, that we are trying to have this meeting today. We are here today. Before I say anything, can I then request Ms. Ndabeni to take us through, because I don't want us to waste time, to take us through who's roll call in terms of members and the staff, and then the office of the AG will also reflect, and the department will also reflect who's here. Ms. Ndabeni, can you please take us through the roll call?
Good morning, Chairperson, honorable members, as well as colleagues. So far from the Portfolio Committee on Employment and Labor, we have the following members: the Honorable Chairperson Dunjwa, Honorable Nontsele, Honorable Mdabe, and Honorable Zuma, Honorable Kado, Honorable Hinana, Honorable Mkonto, Honorable Ngobo, as well as Honorable Denner. And Chairperson, I received one apology from Honorable Bagrame. From AG, we have Ms. Michelle Megaman, who's going to be doing the presentation on their side. Thank you, Chair.
Honorable Ndabeni, are you the only one that is present today from the staff?
Oh, my apologies, Chairperson. From the committee support staff, we have myself, Portia Ndabeni, the committee assistant, Swungseni Ngobo, the content advisor, as well as Debuo Mukwena, the researcher, as well as Ms. Kolelo Mabindisa, the executive secretary. Thank you, Chair.
Thank you, honorable members. Thank you, honorable members. The office of the AG.
Thank you so much, Chairperson. From our side, I am here, Khabuko Mapi, the business executive overseeing the portfolio, among others. I am supported by Ms. Michelle Mageman, the deputy business executive overseeing the portfolio as well. I also have Ms. Nana Sekwati, who's a senior manager overseeing the UIF. That is from our side. I also have my stakeholder license manager, Mr. Gabelo Makitla. That is a team from the AGSA this morning. Thank you, Honorable Chairperson.
Thank you very much, ma'am. First, I think it will be important from my side to thank you very much for availing yourselves. Well, we can say at a short notice, but the matter that we have requested you to come and present is a matter which is of the public domain. We're of the understanding that you have important that as the line committee will also be taken and through, and our apology for that, which has then subsequently I have to humbly apologize to members that they got the presentation. We got the presentation late last night. It was not a deliberate thing, but I will understand from your side you had some glitches. It is important, honorable members, that we have this this briefing. Remember that the minister in his budget vote He did reflect on the challenges that are engulfing these two entities, in particular the compensation fund, which has got a disclaimer
Recording in progress.
for almost 10 years. And we do understand that we were not part of this committee in the last term, but we're here now. And we can't say, because as leadership, you take the entire package. We can't then say, no, we are not going to be concerned about what transpired 8 years ago or 7 years ago. But it's our responsibility to have an understanding, because the matter is really grave. It has always been concerning us, the situation around these two entities. And therefore we thought that it's important that we hear from you, so that when then we discuss as the committee at our appropriate time, we discuss having been informed rather than being informed by media. And therefore we think that you are relevant as always. And we hope that you are prepared, as that you have always been prepared. So we are happy that you have availed yourself, and our approaches to put you under serious pressure and a communication breakdown. Unfortunately, there are processes in Parliament that we can't just jump, because, for instance, today we need to have a special application because there's a sitting today. Committees are not allowed to hold meetings during a sitting, not unless it's a matter of public interest. Thank you very much. Ms. Ndabeni, can people who are not either, no, let me not refer to you, people who are not from the department, people who are not from the office of the AG, people who are not from the committee and Parliament in general, can they introduce themselves? I will tell you why, honorable members. I found one person who sent a memo, an email to Portia and saying something that has never been. Next week, we are not deliberating on a bill. And when I asked this person, but who said, no, I got an SMS from somebody, and he didn't want to say, who is this somebody? Committees are of public interest, that I know, but we must know who is here so that people don't spread an information that is not true and put the committee section and the office of the chair under unnecessary pressure. So who is not coming from all the departments that I have mentioned? Can they please introduce themselves? If they are journalists, tell us with house, media house you are coming from. If you are just a person who has got an interest, there's nothing wrong with that, but you must know. Can I have those, please? Because Ms. Ndabeni won't know until you tell us yourself. I see N. Zawul, his mic or her mic is on.
Can I talk?
Yes, you may.
Hello. My name is Leanne Zhao. I am the CEO of CoidLink. CoidLink is one of the third parties who are interested in what's going to happen with the bill.
Who are interested in?
I am the CEO of CoidLink. CoidLink is a third party, or what you call administrators. We presented last 2 weeks ago. We were the second group to present.
Okay, all right. No, that's fine. No, that's fine. Please, please mute. Who else is coming from outside? Mr. Delwat?
Good morning. My name is Deval Tagler. I'm the Chief Operations Officer of Quaitlink, also an interested party.
Thank you very much. Members or guests may take this as maybe being something that it's petty, but it worries when out of the meeting, the committee secretary is inundated with calls and emails of people who were not even part of the meeting, who didn't even introduce themselves if they were part of the meeting, misrepresenting what the program of the party is, of the committee is. As the chair, I don't take that kind because we have got bigger things to be responding to. And if members circulate information to their people, I don't have a problem with that, but please give them the exact announcement that was made and exactly what the committee is going to be dealing with. Having said that, we will then hand over to the office of the AG to take us through. I'm of the understanding that all of us, as much as we received it late, but we did receive. I'm not sure if there's anybody, sorry ma'am, I'm not sure if there's anybody from the department. They will indicate later. You may continue, ma'am. Thank you.
Chair,
Sorry, yes?
Chair, my name is Teboho Tejani. I'm currently the acting UIC whilst Ms. Bronkhorst is on leave. So I am from the department UIF.
Okay.
Thank you, Chair.
All right, thank you. Anybody from Compensation Fund?
Thank you, Chair. My name is Vuyama Fada, Chair, the Commissioner Compensation Fund. The DG did, has apologized. He is at the NEDLEC Exco this morning.
Okay.
Thank you, Chair.
Thank you. All right, you may continue, ma'am.
Thank you so much, Honorable Chairperson. I think just from our side, you are right. We were requested by SCOPA to come through about a week or so back. They particularly expressed their interest in the audit outcome of UIF and Compensation Fund. Similarly, we'll be sharing with the Portfolio Committee the audit outcome of the two entities. And I think from the AGSA, we are forever waiting to be of assistance to the committee. Really did not matter a lot in terms of the lateness of the invite. But what mattered is that you eventually invited us, and we're very grateful for that. We can never take it for granted. We are going to take you through the presentation. Ms. Mageman is going to try and pace herself in taking the committee members, appreciating that they may not have had enough time to look through the presentation. So we'll take the comments and the questions at the end, Honorable Chairperson. I think for the Compensation Fund, we did a bit of a reflection for the past 10 years as well, just to try and show some of the committee members where we're coming from and the journey thus far. But overall, the audit outcome will particularly be focusing on the financial year 1920 that we just completed. Thank you so much, Honorable Chairperson. If I could ask Michelle to please beam the presentation and take us through. Thank you.
Thank you. Good morning, Honorable Chair. Good morning, members of the committee. I will be taking you through the presentation. I'm going to share my screen with you. If I can have an indication that you can see.
Yes, we can see. But
Thank
we
you
also
so
want
much.
to see your face, if it's possible. If it's not going to affect
Okay, is that better, Chair?
Yes, it is.
Thank you so much. Thank you. Thank you, honorable members. The presentation today will be on the Unemployment Insurance Fund and the Compensation Fund for the year that we have just completed. I will start with our reputation promise that we are the Office of the AGSA and we have a constitutional mandate and we exist to strengthen our country's democracy by enabling oversight, accountability and governance in the public sector through auditing, thereby building public confidence. And these are the reasons why we appreciate such meetings, because we are able then to empower you with information so that you are able to perform your oversight functions and also the accountability functions that you so wish to do. On the next presentation, honorable members, here we are giving you a highlight of what we do audit. We audit the 3 areas. We audit the financial statements. So we have an opinion on the financial statements to say, do they have any errors in them, and are those errors corrected or not? And then we also look at the performance information for predetermined objectives. So we look at the annual performance report that is in the annual plan, and we have findings in terms of whether those reported targets, performance indicators are reliable and are credible. We also then look at your compliance with laws and regulations, and we then also include findings where necessary on compliance with laws and regulations. So we audit the 3 areas for the entities. In terms of the audit opinions, we have 5 types of audit opinions. We have an unqualified opinion with no findings. This is where the financial statements do not have errors. There was no findings on the usefulness and reliability of the performance information that is reported in the annual report. And also there were no findings on compliance with legislation. And this is the ultimate goal for the entities, where there shouldn't be any errors in any of the 3 areas that we audit. In terms of financially unqualified opinion with findings, this means that your financial statements do not have errors. So the final financial statements that are presented in the annual report do not contain any material errors. Either they could be corrected during the audit process, or management also identified errors, but the ultimate ones that are sitting in the annual report do not have errors in them. However, in this category, you can have findings on performance information. So we can look at whether the targets that are reported are reliable, and also the performance information is useful. You can also have in this area the findings on compliance with laws and regulations. In terms of the qualified audit opinion, here we're saying that your financial statements in some areas have errors. So some of the items that are in your financial statements, we've identified that they have errors, and therefore that specific area cannot be relied upon when making decision making. And in this area, you would also see that you can also have findings on your performance information, on your reliability or usefulness, or you can have findings on compliance with laws and regulations. In terms of the adverse opinion, in this instance, we're saying that the areas that are qualified, so the number of items on your financial statements that have errors are quite a lot, and we disagree with the numbers that you have in the financial statements throughout the financial statement. So we're saying that what you've disclosed as auditors, we do not agree with those amounts that are there throughout the financial statement. So it's not just one area, it's a few areas that will be affected. And we usually put those areas in the audit report. In terms of a disclaimed opinion, here we are saying that there are quite a number of areas in the financial statements where information has not been submitted. So there's no evidence that can be submitted to prove that the amounts that are disclosed in the financial statements are accurate and they are complete. And those are the 5 audit opinions that we have. This slide just gives us an indication so that you can follow as I go through the presentation, that the colors that we are using similar to the colors that I've used up there. If it's green, it's unqualified. with no findings. If it's yellow, it's unqualified with findings. Purple is qualified, and the pink is about adverse. Disclaimed is red. And then also there's arrows that are utilized throughout the presentation so that you are able to follow. So if you look at the audit outcomes for the two entities, you will see that the entities have fairly remained stagnant throughout the years, throughout the 2 years that we've audited. You'll see that CF has remained in the disclaimer environment for quite a number of years. So our assessment, if you look at the narratives, we're saying that our assessment is still indicating that the control environment in the compensation fund is weak, and it is very concerning. There is a lack of urgency by management to improve the control environment in order to facilitate credible financial and performance reporting. As a result, the audit opinion for compensation fund has been modified for the past 10 years. So with the exception of 2010, 11 and 11-12, which had an adverse opinion, the previous 8 years were still a disclaimed opinion. And then in terms of the UIF, we are saying here that material misstatements were identified in the financial statements of the UIF, and the audit outcomes then remained stagnant with a repeat qualification. However, for this entity, for the UIF, it is noticeable that the current financial year, the UIF is accumulating additional qualification areas, which indicates a regression in the control environment. So the UIF, where we had a few areas that we said had errors in the financial statements, we've realized that they've gained a few more in the current year, which we are concerned about. And then for both entities, there was material non-compliance with the legislation as well. In terms of the financial statements, as a whole, the entities both submitted the financial statements late. The financial statements had errors, which could not be corrected, which resulted in those audit opinions. And I've just repeated there at the bottom to say that they obtained the qualified opinion as they could not correct some of the material misstatements for the UIF, and the compensation fund obtained the disclaimer opinion because they did not provide appropriate audit evidence to support amounts reported in the annual financial statements. And this has been the case for the past 5 years, which we are saying it's concerning and requires intervention. If you look at this wheel, I was trying here to give you an overview to show you the areas in the financial statements that are being affected for compensation fund in terms of the qualification areas. And you can see in the financial statements that even if just looking at financial position, that quite a few areas have been had qualification paragraphs, as well as the financial performance, as well as the disclosures. And this is what's giving rise to that disclaimer opinion, due to the number of areas that are being qualified because of the non-submission of information. In terms of the qualification areas, I'm going to start with the compensation fund. So I'm going to take you through the areas that were qualified, and I'll do the same for the UIF. So if you look at compensation fund, the first one we're looking at is the revenue and receivables. So here we were expressing an opinion as a result of the return of earnings. So we've identified that there is a control deficiency in terms of the completeness and accuracy of the return of earnings that the employers are bringing to the fund, as some of them are not being assessed. And we're in the bullets here, we're saying an inadequate assessment of the accuracy of information submitted by the employers, inadequate processes in place to ensure all employers are registered and assessed, inadequate enforcement of the Act for employers not complying. So it is a requirement that all employers must be registered with the Act, with the compensation fund, and they must give the compensation fund the return of earnings so that they can calculate the contribution, which will then be disclosed as revenue in the financial statements, and it will also impact the receivables balance where employers are owing the fund. The next qualification paragraph, it's on benefits. So here we were requesting for a list of claims, of claim data listings to substantiate the figures recorded in the financial statements. However, this had errors in it and did not agree to what was disclosed in the financial statements. This resulted in an inaccurate calculation of the provision, as well as the capitalized pension on actuarial valuations. So this benefit, not being able to audit the benefits by having appropriate schedules that agree to the financial statements, this also impacted the balances that impact the statement of financial position, which is your provision, where you calculate future liabilities that will be paid out. Therefore, because of this listing not being available, we therefore could not then conclude whether this provision and the capitalized pension was accurate. In terms of payables from non-exchange, there were some debtors, there were some credit balances that were identified in the debtors, and there was not sufficient support to say that this is definitely a credit balance. So where the debtor has overpaid you, it means that you then owe that debtor, and therefore this should be taken to your payables balance, to your liabilities, to show that you owe somebody else because they overpaid you, and therefore that supporting documentation we could not get. In terms of the consolidation of investments in associates, investments in the financial assets and associates, here there were various areas that various unlisted investments that we looked at. The concern here is that there was insufficient and appropriate audit evidence to validate the data used to perform the valuations of unlisted investments in the current year. Therefore, this means that when we were auditing, we looked at what the evaluators were utilizing to calculate the amount that is disclosed, and we realized that in some instances, the evaluators themselves did not have that information to validate some of the numbers that is coming from these investments in associates. Let me make an example. So for example, if an entity you've invested in says that they are going to have future cash flows of a certain amount, you would want to know what is going to give those future cash flows. So those cash projections, as well as the support for those cash projections. So for example, if they say we've entered into a major contract, and this will result us having more money, we would want to see what is that contract that you're entering into and what makes that number of what that value is going to be that you're going to achieve. And your valuation reports need to have that kind of detail, and the valuators, when they're doing that valuation, should be able to come up with the correct balance that is there. However, in this instance, we could not get a comfort that those valuation reports had supporting documentation to validate the numbers that are there. In some instances, we also saw that the valuation reports for investment companies, where there was different accounting frameworks. For example, the compensation fund uses the GRAP accounting standards. Private sector entities use the IFRS accounting standards. Therefore, there are some differences in those accounting frameworks where you would need to do a reconciliation to say there's a difference in those categories for it to be compliant with GRAP. This is the adjustments that need to be made, and those reconciliations were not performed. For the prior period errors, the compensation fund did have quite a various number of areas that they needed to look at because of the audit opinion, and in some instances, they were correcting the prior year's errors. However, we could not obtain sufficient supporting information that all the prior period errors that were performed were supported by some information that we can rely on. In terms of contingencies, here it is a requirement that you disclose contingent liabilities, which is future or possible liabilities that an entity might occur. For example, if there's a lawsuit against you, you would need to calculate to say, I would probably lose about 10 million from this lawsuit, looking at maybe a state attorney's recommendation to say you might lose so much, that 10 million, for example, would need to be disclosed in the financial statements. So in this instance, we're saying there was not adequate records in respect of contingencies relating to securities and notice of motion and summons. And this was not, these summons and motions were not adequately maintained. In terms of irregular and fruitless and wasteful expenditure, here we could not conclude on the irregular and fruitless and wasteful expenditure due to the insufficient supporting documentation to support the irregular expenditure. So there's quite a lot of irregular expenditure in the that has been identified. However, the support for that irregular expenditure could not be provided, and therefore we cannot conclude that the amount that is disclosed there for irregular and fruitless is adequate due to us not being able to verify what the expenditure was and what that instance was and whether it's been resolved. That was all for the compensation fund. I'm going to move over to the UIF. So for the UIF, the qualification areas are as follows. So similarly to the compensation fund, we also had a qualification area on the investment in associates, interest in joint ventures and other financial assets. And therefore, this also impacted other areas that have to do with the investments, for example, your impairment of investments in associates, and also in your interest in joint ventures, and also the income from equity accounted investments and interest. So this area affects these areas in the financial statements. So in terms of the fund, here we're saying that the fund incorrectly applied the principles of GRAP 1. The principle of GRAP 1 talks about impracticability. And here we disagreed with the fund to say that it is not impractical for them to obtain information from investees that they have invested in. Here we're saying saying the fund should have implemented controls throughout the year in order to ensure that in order to ensure that the investments are accounted for. So throughout the financial year, the fund needed to make sure that they obtain the financial records of those investees, or management accounts of those investees, make sure that they are able to recalculate their own balance that should be disclosed in the financial statements. So we're saying you cannot use the impracticability principle in this area, and you should be using the appropriate accounting GRAP standard, which is a GRAP standard 7 and 8. And then for the second bullet, here it's very similar to that of the compensation fund, where where information relating to investments were obtained, there was a lack of verification process conducted on the valuation of source data that is used to calculate the valuation of investments. The third one is that the fund did not appropriately account for losses incurred in relation to unlisted investments held at amortized cost. So this was a calculation where the investment is used at amortized costs, where there was errors in terms of how this calculation was done. And then the close monitoring of these investments is key to enable reliable reporting, which will enable the fund to determine whether funds invested are yielding the return that is desired and value for money is being maintained. So the last bullet is just to close off to say the close monitoring is very key, so that the fund throughout the year is able to calculate the investment that they have, the value of investment that they have in the entities that they're investing in. The next one for the UIF is the benefit payment and provisions. Here the fund is required to calculate the various stages of your possible liability or your liability. So looking at the environment, saying that, in future, this is what we as the UIF will pay in terms of claims that we are going to get. So in some instances, the claims are already brought into the fund. So the people have already come to say, I'm going to claim, but yet the fund has still not completed their assessment, so they have not approved the claim itself. There are also instances where you need to make an assessment to say, looking at the environment and where we are in future, the fund, looking at the statistics and the data that we have, the fund will possibly have this type of liability in the future. And here we're saying that there were quite various misstatements in terms of how the fund calculated their liability. So if you look at the first bullet, it says benefit payments were misstated as large components of outstanding claims were not provided for at year end. This represents the claims which were reported by beneficiaries but not approved by the fund, and the claims that are estimated to have been incurred at year end but not reported. And claims relating to the previous year were inaccurately included in the current year. So this one was just an addition to the benefits payment misstatement. In terms of contingencies, this is similar to the provision here at the top. Here the fund needed to calculate its future liabilities in terms of the unapproved claims. So this paragraph states that the liabilities of the fund are inaccurately stated. Mainly contingent liabilities were misstated and reported, on the reported but unapproved claims, and incurred but not reported claims that qualify for recognition as provisions being disclosed as contingent liabilities. Furthermore, the fund inaccurately disclosed the technical reserves as contingent liabilities. So these two qualifications, the benefit payments and provisions and the contingencies, are very linked, because here we talk about when you have an actual claim that you only just need to approve, which means that you actually have a liability. And the second part is you need to assess whether what kind of liability you're going to have in the future. And sorry for that, I was disturbed. And the future claims that are coming that the fund will still need to pay. In terms of subsequent events, we also have a paragraph that in the financial statements, the fund incorrectly disclosed that the decision to pay the COVID-19 TERS benefit was made after year end. However, the decision was gazetted and published prior to year end in line with the Gazette. In terms of commitments, the balance of commitments disclosed in the financial statements of the fund was misstated due to incorrect calculation of the commitments amount at year end, as well as omission to include the amounts of some contracts for which the fund has committed as at the financial year end. In terms of investment property, the investment property values are incorrect. The fair value adjustment of investment properties of the fund were incorrectly calculated using the prior year fair value amount, and hence the closing balance as disclosed in the financial statements at the year end is misstated. In terms of the financial statements, that was the qualification paragraphs for both the compensation fund and the unemployment insurance fund. In terms of the performance reports, here we're saying that the performance report submitted without errors, we had findings in both the compensation fund and the UIF in terms of what was submitted to us. But even after the audit, there were still errors in the annual performance report for both the entities. In terms of the compensation fund, we had findings on the program 3 on medical benefits. Here we are talking about the insufficient supporting evidence and listings to support the performance achievements. The listings that were provided to us to support the annual performance report differed from what was reported in the annual performance report mainly on the percentage of medical claims finalized within the 14 working days of receipt, and the percentage of pre-authorization responded to within 10 working days on previously finalized
Recording
cases.
in progress.
So those two indicators. In terms of the unemployment insurance fund, here we had a finding on the program 2, which mainly is around the business operations. And this mainly talks about the turnaround time that it takes the fund to calculate how long they take to process applications. And here we had some errors in terms of the calculation method used and what is sitting on the system. So the calculation method that they used and how we then recalculated is the turnaround times. There was quite a number of differences in the system, in what was reported in the system. And when we take the supporting documentation to say that the person brought their application today, and today we've registered it, and it took us about 5 days to process it. But when we were doing that recalculation, there was differences in terms of what was being reported. In terms of the non-compliance with legislation, I will start with the compensation fund. So in some areas, the financial statement one is coming from what is in the qualification paragraphs, and some of the non-compliances is based on what is required by the PFMA in terms of some of the areas that the fund needed to do. So for the annual financial statements, here we're giving a non-compliance because the PFMA requires that financial statements must be complete and accurate and supported by full and proper records. Looking at the disclaimer opinion, they did not meet this requirement as per the PFMA, as well as expenditure management, which states that there must be effective and appropriate steps taken to prevent irregular expenditure. And the value as disclosed in the financial statements does not reflect the full extent of the irregular expenditure. And most of the irregular expenditure that is disclosed is caused by non-compliance with various national treasury procurement requirements. This is very similar to fruitless and wasteful expenditure, which is the second bullet under there. We also had a non-compliance, which talks about resources of the public entity were not utilized economically, which also speaks to some of the areas in terms of the fruitless and wasteful expenditure. In terms of consequence management, here we look at the irregular expenditure and fruitless and wasteful expenditure that was incurred in the previous years. And we look at what has the fund done to ensure that consequence management has taken place. And here we are saying that sufficient and appropriate audit evidence that disciplinary steps were taken against officials who incurred the irregular and fruitless and wasteful expenditure could not be provided. And proper record and complete records were not maintained to support the investigations. So some of this irregular expenditures coming back for a few period of years, where some of the supporting documentation cannot be provided by the fund to determine how far what the investigation is about or how far the investigation is. In terms of the unemployment insurance fund, we also have the annual financial statements paragraph, which states that they did not submit financial statements that are free from material misstatements. In some instances, they were able to correct some of the errors, but some instances they could not correct some of the errors. In terms of expenditure management, here we're talking about there was a prepayment made to some service providers, which is not allowed in terms of the treasury regulations, and this was not also as per the terms of the contracts that the entities entered into. In terms of consequence management, there was no sufficient appropriate audit evidence that disciplinary steps were taken against officials that had incurred irregular expenditure. And the second one is that sufficient appropriate evidence that disciplinary steps were taken against some of the officials who had permitted irregular expenditure amounting to 86 million in the prior years could not be provided. And also disciplinary hearings were not held for confirmed cases of financial misconduct. So here, if we look at just the 86 million, the fund had incurred irregular expenditure in 2015. Where the bidding process, there was a conflict of interest with the winning bidder, and it was identified and it was then disclosed as irregular expenditure. Therefore, consequence management as per the PFMA needed to take place. There was an investigation that took place. The investigation was concluded. Recommendations were provided that disciplinary hearings should be held, and the responsible officials should then be charged with financial misconduct or should be disciplined for financial misconduct. However, this process has not taken place as yet, and therefore this gave rise to this paragraph. In strategic planning, we're saying that quarterly reports were not submitted to the executive authority as required by the Act. So as part of the audit process and also included in the audit report, we look at the internal control environment and we assess to say what broke down in terms of the internal control environment that gave rise to these audit outcomes. And if you see that in terms of the criteria under leadership, financial performance management, and governance, we are looking at the two areas under leadership in terms of oversight, responsibility, and action plans. And I will take you through the detail in the next coming slide. And then under financial performance management, we're looking at daily and monthly controls. We're looking at financial reporting. Sorry, this is they just cut here, but it's the financial performance reporting, and then review and monitor compliance as well as risk management. If we look at the UIF, we did give them a yellow, which is of concern, and for the compensation fund, we're saying intervention is required. So if you look at the UIF, we say that there is a concern, and we wouldn't want the UIF to fall into the red category. But if you look at the progress that they made in terms of the qualifications, last year they had a few qualifications, they've added more in the current year. We're saying that they must focus on the internal control environment to ensure that it is strengthened so that they do not regress in the year that we are auditing. In terms of the internal control environment on this slide, I'm looking at the unemployment insurance fund, and I'm saying under all those categories, these are the internal control deficiencies, the key ones that were identified. So we're saying in the top one that management developed an audit action plan to address the internal control deficiencies. However, the plan has not been adequately monitored to ensure that there is effective implementation of corrective measures to address the internal control deficiencies. As a result, there were recurring findings and not all prior year findings were addressed. Under financial performance management, here we're saying that the quality of the annual financial statement submitted was concerning as it contained numerous errors. The accounting authority did not therefore ensure that there's adequate controls over the preparation of the financial statements and the annual performance report to ensure compliance with laws and regulations. So the accounting authority must ensure that there are controls in the preparation of the financial statements. So there must be reviewers that are in place. There must be adequate review that actually happens, not just somebody ticking, but it must be adequate in picking up the right areas. And also some of the assurance providers must also play their role that is key to ensure that the financial statements are reviewed. Management did not implement proper record keeping to ensure that complete, relevant, and accurate information was accessible and available in a timely manner to support financial reporting, performance reporting. That's resulted in unnecessary delays in completing the audit. Yes, we signed off the UIF late. Some of the areas like the investments also took time, as the records that we were looking for, the valuation reports were not necessarily well kept, resulting in some of the qualifications. And management did not implement adequate controls relating to daily and monthly processing and reconciliation of transactions. The controls that management put in place to ensure regular and accurate and complete financial reports did not always prevent or detect material misstatements. So here it's again speaking to also the oversight or the adequate controls over the preparation of financial and performance report, that there must be controls daily that will allow you to eventually have proper financial statements at the end of the year, or monthly or quarterly. and management did not adequately review and monitor compliance with applicable rules and regulations, which resulted in non-compliance with legislation, and delays were experienced with regards to submission of requested information. This is also the record-keeping part of the financial and performance management controls. In terms of internal audit and audit committee, the fund had an established internal audit and audit committee. However, there is also a need that the recommendations from these structures are expedited and are implemented. If you look at the compensation fund, in terms of leadership here, we're talking about consequence management, and also that there must be that level of highest level of excellence that must be instilled within the fund, where there's a commitment to make sure that action plans are implemented, that consequence management is implemented, so that from leadership we're saying that it just needs to be improved to show that they are committed to improving the control environment. And then financial performance management, here it's similarly to the UIF. We also talk about the accurate and valid and complete financial preparation of financial statements and performance reports, and also regular reconciliations, as well as adequate reviews by management on the financial statements. As similarly to UIF, under governance, we also talk about the recommendations from internal audit and audit committee to make sure that these recommendations are implemented so that the fund also gets the value from those assurance providers, and also the risk management processes must also be timelessly completed, and those risks must be identified and actions then implemented. I'm going to move over to financial health. Here we look at whether the two entities are viable, so they can sustain themselves. And here we're talking about the UIF. The UIF does have a deficit in the operate. There is an operating deficit for the current year. There is a bit of a concern. In terms of the compensation fund, we could not assess the compensation fund because if you look at the audit opinion, we are saying that it is a disclaimer, therefore the information that is obtained in the financial statements cannot be relied upon for us to do a proper financial health assessment. If you look at irregular expenditure, there is this is a fruitless and wasteful expenditure. There is an increase in the fruitless and wasteful expenditure, and this is mainly caused by the fruitless and wasteful expenditure of 21 million, which is on the compensation fund. There was quite a bit of interest, sheriff and legal costs on garnishee orders that were incurred by the fund. This is mainly a result of late payments to the medical service providers. If they've given you an invoice, you should pay them, or the court has sanctioned that you should be paying the medical service providers a certain period of time. If you don't do that, the medical service providers have charged interest. Therefore, this has led to fruitless and wasteful expenditure. In terms of irregular expenditure, there is a decrease in the irregular expenditure. For both the compensation fund and the UIF, this mainly results in the extension of variations of contract values, where if they've entered into a contract, if you exceed either the 15 million or 15% in terms of the treasury regulations, if you're exceeding those amounts, you need to get approval from the National Treasury, where we saw that in both the funds, this was not this approval was not obtained. In terms of investigations, the UIF, there are a few investigations that are currently underway at the UIF. So the variation exceeding is coming up a few times for the UIF in terms of the investigations to make sure that consequence management is implemented. But the compensation fund, from the information that we have, we've calculated the total number to be about 487 of investigations that are currently underway. And we're saying here at the bottom, 126 of those relate to fraud within the compensation fund, and there is some progress that is being made, but it is still very slow. If you look at the bottom part, 71 are still not finalized, and there was 9 that were referred to law enforcement. So this part of the fund needs to make sure that they expedite and they close these investigations and they follow up to enable consequence management to take place, including the UIF on these ones that we've listed here. In terms of the TERS audit, I just wanted to remind the committee that we had done the Special Report 1 and Special Report 2, and it was issued by the AGSA. However, you should note that these transactions are incurring in the year that we are currently now, that has now finalized, and we are currently auditing. Therefore, the opinion on these financial transactions will be provided to you when we finalize the year that we are auditing now. That was on the audit outcomes and the internal control deficiencies that we've identified for the fund and the UIF. What I wanted to take the committee through is what we call, we have guides in terms of preventative controls, where we are advocating that the entities in the public sector should utilize these guides in order to improve their control environment. This was done in conjunction with National Treasury, with the previous Auditor-General, Kimi Makwetu, where they had combined and they provided guides in terms of how to improve your control environment, because it is more critical that you implement preventative controls and not, and even though detective controls are important, however, preventative controls are the key ones, because those will catch the errors or the transgressions before they happen. Because if you look at this, the left part of the presentation, if you do not have preventative controls and they're not designed or implemented, or they're not working effectively, then you fall into this category where there's consequence management that needs to take place, financial loss happen, costly investigations, disciplinary process need to take place, as well as in some instances litigation that needs to take place. Therefore, it is important that a strong control environment with assurance is provided, and these assurance must be provided by senior management, accounting of authorities or officers, internal audit and audit committees. And we've listed the areas that in the business processes where these preventative controls should be implemented: your supply chain management, your contract management, payments, employee process and payroll, asset and liability management, and revenue management. These guides are available, and as well as at the National Treasury, they also have these guides. What I wanted to highlight is the importance of the tone and control culture, because that is the cornerstone of a control environment. So the tone and control at the top is very key in order to build a good control environment in an entity. And if you look at the first one, it talks about the commitment to integrity and ethical values that should be demonstrated. And this is demonstrated through the behaviors of the accounting authority at all levels. They should firstly start by acting with integrity and ethical values, and support the functioning of the system of internal controls, and then establish standards of conduct. So they need to establish how the behavior should be, and concerning mainly on integrity and ethical values, and they should be defined in the institution, and evaluate adherence to standards. So there should be processes in place to evaluate the performance of individuals and teams against the expected standards of conduct. Independent monitoring is also provided through performing oversight and development of performance and internal controls. This must be done. Regular engaging with internal audit, as well as also the AG, where we do have regular engagements regarding the internal controls. Taking appropriate action to ensure identified deficiencies in internal controls are addressed by management on a timely basis. This is very key, as well as a positive attitude towards accountability through credible financial performance reporting for the rule of law, and then demonstrating independence from institution and objectivity of oversight. The third one, it's about the discipline of adherence to controls on a daily basis should be ingrained into the culture of the institutions. So this, the employees or officials that are working for an institution should make sure that on their daily activities, they adhere to controls. So there shouldn't be a signature that is missing or a review that is not adequately done. And this should be part of how officials come to work on a daily basis. Implementing of effective consequences, I cannot say this any bit more. You've seen it in the audit outcomes as well. So making sure that consequences for transgressions are taken timelessly to set their tone and to make sure that employees are aware of their responsibilities and what is expected from them. And then establishing and communicating policies and processes. Leadership must ensure that there are adequate processes and policies in place so that people know how they need to function and what controls they need to put in place and what their duties are to make sure that their daily activities are well known to them, and you can also hold them accountable. And then demonstrate a commitment to competence. So this is so here we're talking about how accounting authorities must demonstrate a commitment to competence, should ensure that they attract and retain competent officials and invest in their continuous upskilling. Effective human resource management should be implemented to ensure that adequate and sufficiently skilled resources are in place and that performance is monitored. And there should be proper job descriptions so that they attract the skills that are required. And then the next one is the use and assessments of independent assurance providers. So here we're talking about utilize the audit committees that you have, the recommendations that they give, and implement those recommendations on a timely basis. And that is on the preventative controls. So on Chairperson and honorable members, we do have recommendations that we've provided to the Compensation Fund and the UIF. I also have recommendations that I would like to also share with the Portfolio Committee in terms of how you can also assist in enhancing some of the control environments. For the Compensation Fund, we did indicate to the Compensation Fund that there is an urgent need to review the control environment of the entities, including the role of management and subsequently strengthening the preventative and monitoring controls. There should be a discipline in ensuring that accurate and complete financial performance records are maintained. This will ensure that financial statements and performance report are supported by reliable evidence. Responsive action plans should be implemented and continuously monitored, and consequence management should be implemented and monitored on employees who have transgressed in respect of irregular, fruitless, and wasteful expenditure and financial and other misconduct. And leadership of the entity must instill a culture of accountability and a tone that will ensure internal controls are adhered to, and where transgressions are identified, immediate appropriate action should be taken. For the Unemployment Insurance Fund, we said here the continuous monitoring and evaluation of investments is vital, as this is a systematic measure and assessment of financial performance activities and results. The purpose mainly being to check on the progress of implementation and output systematically. This will assist the entity in determining whether an investment is performing as expected, and or whether reprioritization of funds is required. Furthermore, an effective internal control reduces the risk of asset loss and helps ensure that the reported information is complete and accurate, financial statements are reliable, and that the entity's operations are conducted in accordance with the provisions of laws and regulations. And it's therefore important that UIF have to have the controls in place that will assist with the in-year monitoring processes that will result in effective implementation of activities intended for good and sustainable financial management. We also said that the fund should also revisit the internal control environment and also look at their risk assessment processes and action plans and make sure that these are monitored and assessed for effectiveness to enable timely responses to material issues, and also consequence management be implemented and monitored on employees who have transgressed. I therefore have the recommendations that I'd like to bring to the portfolio committee. Here it's 3 recommendations. We're saying that if you can obtain quarterly reports from the entities detailing the progress made on finalizing investigations currently in progress. Also obtain quarterly report updates from the entities on the progress made on implementation of the action plans, specifically relating to the review of the control environment, and also obtain assurance from leadership and governance structures that the action plans implemented are effective and that the committee resolutions are also implemented. Thank you, Honorable Chair. That is the end of my presentation.
Thank you. Thank you, ma'am. No. Honorable Nonsele, can you please mute? Before I just, who is BPO? Who's BPO? Whose phone is that one? Can you identify yourself?
Yes, good morning, Madam Chair. My name is Brian Pivo.
From?
WCA, Workers' Compensation Assistance.
Okay. In future, write your name. Who's JDN?
Good morning, Madam Chair. I'm Johan de Bruin, also from Workers' Compensation Assistance.
Okay. Thank you, ladies. What now we are going to do, we'll ask clarity from the AG's office. There may be some questions that you are present, because at times, for instance, after this presentation, we are then going to, I'm just outlining the process. After this, we may then call the 2 entities to say, this is what you have reported, that is what has been tabled, this is what is then being reflected, what is your take? At times, you wouldn't be there for you to then respond, or for them to respond in a manner that you will then understand better. I will make an example. There's an area where it's being said there were no documentation to a particular area. And if that question is asked, if we would be compelled to ask them that you are here, we think that because you were the people that were dealing with the process, at times it will be better that when members are asking those questions and they respond in your presence. I am not implying that they are likely to give us, when they meet with us, they're likely to give us something that is not the response that they gave to you. Honorable members, we are going to ask clarity. We are going to ask clarity from, is there something that you want to say? I see you have not.
Yes,
muted.
Chair. I think that, all right.
Okay.
Thank you, Chair. I think there were just key elements because there's so much that we've said, right? But I think in the main, the key message we wanted to leave the committee with is that for the longest time, as the AGSA, we're not expressing an opinion on the compensation fund. So if you take the compensation fund and you take the UIF in contrast, you would see that in the UIF, we are able to express an opinion. We are able to say, except for the following 5 or 4 paragraphs, whatever the case may be, then the rest is actually okay. But with the compensation fund, for the 10 years, 8 years of that 10-year period, it was a total disclaimer. And disclaimer just says, as the AGSA, we're not able to associate ourselves with the financial statements and the APR that they put on the table. And the 2 years of that 10 years was adverse. And adverse was merely saying that which you reported on is totally misleading. And I think when we deal with these two entities, we need to appreciate the difference between the two. And I think our issue right now is that for the compensation fund, they've been sitting there for the longest time. And at some point, we're going to have to unlock that particular environment, just so that we are able to tell the users precisely what's happening in the. For the UIF, I think over the years, you will see over a 5-year period that they had a period where they were unqualified. And the areas that they're struggling with, it is our view as the AGSA that if they unlock only those few matters, control environment that we are highlighting, it's unlikely for them to continue to be regressing. And I think the two entities are a typical example of an area where we really need to unlock transparency so that we're able to thrash out the matters properly, and an area where there are clear weaknesses that needs to just be attended to for the UIF to go back on track. I think the biggest concern we are having within the portfolio remain the compensation fund. And I think that almost goes without saying. Thank you so much. We will avail ourselves when the entities come. We'll definitely come to support the committee. Thanks, Chair.
Thank you very much. Thank you very much. Honorable members, questions of clarity? I still see one hand.
Member Inana.
Honorable Inana, Honorable Mkondo, Honorable Kado. All right. Honorable Dana, Honorable Inana, Honorable Mkondo, Honorable Kado, in that order.
Thank you, Chair, and good morning to everyone, and thank you for the presentation. I must say it reads like a horror story if you take into account how much money these funds work with. I have one question, Chair. You mentioned that there were mistakes, I think it was the UIF, in the UIF's financial statements, which led to the qualified audit opinion, which cannot be or could not be corrected. I would just like to have an example of those mistakes in the financial statements, please. Thank you, Chair.
Honorable Inana.
Chairperson, thank you very much. I listened very attentively on the presentations made, and what I gathered, Chairperson, was a very bad reflections of the two entities. Much of the word that is being used is the risk management, consequence management, internal credit control that needs to be implemented. But if you look at the compensation fund for the past 10 years, these things have never come to material in order to rectify the situation. Now, the question that I wanted to pose to you, Chairperson and the presenters as well, was what are the remedies that had to be taken in order to rescue the two entities? Because for the past 10 years and the disclaimers that are happening on the UIF, it poses a serious reflection on us on what is that we are doing. Yes, I understand, Chairperson, you said previously that we cannot ignore what previously happened, even though we're not in the office. But the question is, what is it that has to be done in order to arrest the situation that is so dire in the two entities? Thank you, Chair.
Thank you, Honorable Mkondo.
Thanks, Chair. Good morning to you, honorable members, officials from the AG and our guests. Chair, I really have to thank you for this meeting because these things were discussed at SCOPA level, and it was really a bit embarrassing to us as members of this committee. Sometimes it appears as if we are not equal to the task as the members of this committee. So we thank you, Chair, for giving us the opportunity to get these reports. Be that as it may, Chairperson, my clarity-seeking question will be on the management reports. I understand that the AG, they talked about the internal controls, the internal auditing, the auditing committee, and so forth. But then I want to know what were their interaction. How is their relationship with the two entities in as far as management reports are concerned? Because to me, they do send these things maybe on monthly basis to say this month, this is what you should do for you to be on the right track. But then if we are having, Chair, 10 years of such adverse management reports from the AG, is a bit embarrassing on us. So can we then be told as to what was happening with the management reports? Thanks, Chair.
Thank you, Ricardo.
Thank you, Chair. One of the recommendations made in the presentation is that consequence management should be implemented and monitored on employees who have transgressed in respect of incurring irregular, fruitless, and wasteful expenditure and financial and other misconduct. My question is, how does this actually happen? You know, at the UIF, the top brass was suspended last September after the AG's findings on corruption associated with the TERS scheme. But a couple of weeks ago, the CFO and the Chief Operating Officer both returned to work below the radar, and we still don't know anything about the disciplinary charges or hearings that might be hanging over their heads. Their disciplinary hearings were meant to take place in February. Does the AG's office follow up itself on consequence management? And secondly, is the AG's office doing any further investigations into TERS fraud and corruption covering the extended period of the TERS benefit? That's for the UIF. As for the compensation fund, well, words fail me. I mean, it's a complete and unmitigated disaster. The switch over to the Comp Easy claim system has been a nightmare, and I think at some point we as a committee really need to reflect on the sustainability of this institution. Thank you, Chair.
I don't know whether they are. From my side, can members lower their hands, those that have spoken? I just want to check, just overall, it's a general question in terms of controls, in terms of the scales, the caliber of the staff of both these entities, but in particular with your compensation fund and also UIF. Does your report, is it reflecting to that there are people who are in posts where they are not supposed to be in terms of their level of qualification? That's number one. But again, there is coupled with that, is it because in any institution you will find old people who have been there, make an example, for almost 30 years or 25 years, but you'll also have the young blood that has come in. Even on both, is it what you are telling us? Because if there is failure of controls, if there is HR, there are those challenges, that means the entire system. So we have got a systemic challenge in both of these institutions. Is it because of the human resource that is not scaled properly? Or is it because of the human resource that is skilled, but it's laissez-faire? Put aside the issue of pandemic. Pandemic is it's only, we're in our second year now. How do we have an institution, in your view, and I don't know whether you did interact with the governing committees inside, for instance, or to have an internal audit. What is the internal audit of compensation fund saying when there has been this 8 years of disclaimer and 2 years of the adverse outcome? For me, it's just the looking into the broader challenge, which is then systemic, of what is to be done. Honorable Inana, we are to say what is to be done. And but the AG will reflect, I think they've made their recommendations, we'll have then to interact with them. I thought I must just make those comments. If there are no other hands, obviously you will respond and then we will take it from there. And that you couldn't get a reliable information. I'm just trying for me to understand, to be simple and to just understand. Are you trying to tell us that, let's say their filing system, is their filing system in order, or it's just haphazard? The last clarity from myself is that they have migrated to ComEase. They did report and reflect to the committee why they have to go to ComEase, because the last one they did demonstrate that. Now, are you trying to tell us that even this current one that they have migrated to has also got problems, which are problems of, is it because it's problems of human resource, just they do as they wish, laissez-faire? People are just not committed in their work. I'm trying to visualize, in terms of your report, to visualize the place and the work environment in both these entities. Thank you very much. You may respond.
Okay. Thank you so much, Honorable Chairperson. Thank you to the honorable members for valuable inputs and comments. I'm going to just touch on a few of them, and if there are other specifics, I'll allow Michelle to also close that part. There was a question from Honorable Jenna, I think, that talks to what are those errors that could not be corrected. Honorable Jenna, if we go to page 12 of our presentation in particular, you'll be able to see in detail the matters that we are highlighting there. And in particular, we are talking to the investments that they made through the PIC, that we are saying that there's a need for close monitoring of those investments in terms of how they're performing, such that you have reliable information coming through by the time we get to the year-end reporting, you would be in a better position to be able to report reliably. So the first area would have been those investments in particular. But we also talk about the benefits. And on the benefits, I must highlight that over the years, the UIF had gotten this area quite right. So if you look at the financial statements of last year and the audit report last year, they could comfortably report on this provision properly. But in the current year, for whatever the reason, they decided to change the method of reporting on this particular area. And that changing the method resulted with them now reporting incorrectly. And that they just could not get it right up until the point where we had to close the audit processes and report accordingly. So some of these things, previously they used to handle them successfully, but for the current year, for whatever the reason, I'm sure they'll share with the committee, some of these things, they end up not getting them right. So the benefit payments would have been part of it. And we're also highlighting in particular the contingencies. And you're right in saying, why could they not correct them? Because the audit is in such a manner that allows you to correct. But there's also a time frame that we provide. So when we give you an opportunity to correct, you ought to have your filing system properly. You have to have done all your monitoring during the year properly, such that you will be readily able to correct where you need to correct. And I think the areas that we end up qualifying them, particularly on investment, particularly on the benefits payment and the provision, they just could not get it. They could not get it right within the time that the audit. And there was a question from Honorable Mkondo in particular that says that what happened to the management report? And it's a good question. If you go to page 18 of our presentation in particular as well, we reflect on what we expected to have seen in the compensation fund. So what normally happens is that we would execute the audit. We issue two types of reports. We will issue the audit report, that is a public document included in the annual report. But to your point, Honorable Kondo, we do give them a management report. And the good thing about management report is that it is pertinent. So it will get to the nitty-gritty of what the issue is. But what then needs to happen is that they need to, from management perspective of the compensation fund, they needed to put together an action plan, but that action plan need not be symptomatic. So meaning it should be addressing the root cause, and the root cause in our view of the compensation fund, it has to be control based. So you need to say particularly what are the control features that you're going to enhance and ensure that they can respond on time to the presentation that Michelle was talking to, that it prevents the errors, because the moment that you deal with trying to correct the errors, you're already on a back foot. You would not have afforded yourself an opportunity to prevent the things that should not be happening in an environment. So we found that those action plan within the compensation fund was not necessarily responsive quick enough to be able to arrest the situation as it stands. And most importantly, it needed to talk to the root cause of the matters that are happening there, and not necessarily just the finding as we issue them from the AGSA perspective. I think there was a question from Honorable Hinana that I'm going to ask Michelle to respond to in terms of the remedies. But there was a question as well from Honorable Kado in terms of the UIF and the reflection on the consequence management and disciplinary action, primarily or particularly relating to the suspension that would have happened. So, Chair, I would particularly not respond to the suspension of the management and the coming back thereof. That is a space that both management and executive should be able to talk to. What I can say is that from the AGSA perspective, once we give you a finding, we allow you as an executive or as management an opportunity in line with the Act to then decide who should have done what. So we will tell you what did not happen. But in terms of pinpointing to who must take accountability and responsibility for it, we leave it to management, because within the ambit of the law, the AGSA cannot in anyhow start to almost impose what that consequence should be on a particular person. So in terms of the TERS, you would also appreciate that we've released the proactive audit report, meaning the special report on 1 and 2 in terms of the red flags that we picked up. What we are doing now, we are following up each and every finding that we would have put in those 2 reports. And we will be reflecting on what would have happened in terms of management and executive in them following up who's responsible and how did they resolve it. So in that audit, we'll be able to see if we concur with some of the steps that they would have taken or not. And as it stands, so far as TESS is concerned, the issues around consequence management would not have been finalized from our side. But in us following them up, we particularly follow the steps of the executive and management in terms of what they would have done. What I should mention, though, is that we had rolled up the UIF on the amended mandate of the AGSA in terms of the material irregularity. So should it be that there's an element of consequence management that may not have been attended to, we should be able to pick it up on that, on the amendment in terms of the public audit. I would trust that from the fund perspective and executive perspective, they can particularly talk to the processes of suspension and bringing back. There was a question in particular, I think from the comments, maybe Chairperson, from your side, in terms of did our audit reflect on whether people are in positions or levels that perhaps they're not qualified for? Not necessarily. So when we looked at the HR perspective, so from our side, we deal with HR as an internal control assessment, and we would say that yes, you hired the people that you followed the right process. In some instances that we may have selected, you would follow the right process in terms of bringing them in. But what we actually highlighting the compensation fund is that the culture of excellence, we don't find it to be there, which means that in the main, the people that we brought in the system ought to deliver exactly that which we brought them for. And we found that by virtue of having limitations and documents not coming through to the audit, or even coming through in a manner that is not, but they are not reliable, we believe that not everybody is doing what they're supposed to be doing. And we believe that the fund can benefit from almost a non-tolerance culture of non-performance. At this point in time, I think that there's a lot of room for people to up the performance in terms of what they are bringing through to the fund. In terms of what actually costs the fund employees and officials not to do that, I would leave it for the management chair for them to actually respond in terms of when they do the consequence processes, what are those things that are coming through. But from our side, we clearly can see that the culture of excellence and doing things right the first time around is not necessarily at the level that it should be at the compensation fund in particular. What is internal audit say? And I'll clap it together with the audit committee. So we looked at the internal audit reports and we looked at the audit committee minutes as well in terms of their reports as well. And we found that some of the findings that we are giving through to management and the fund, they have already been highlighted by internal audit during the year. So which would mean that the response from management in attending to those findings that internal audit table would not have been where it needed to be, such that by the time the external audit comes through in the form of the AGSA, there isn't a repeat finding of what would have already been identified by this governance structures. So we saw that some of these findings that we're putting on the table, as highlighted in our management reports, they are there in the internal audit reports already. Some have been discussed as well at the level of the audit committee, but management responsiveness in implementing each of those recommendations from those structures would not have been right. And I think that's what ended up getting the fund having a limitation from our side. There is a comment from your side in terms of ComEasy, but you would remember that for the year 1920 that we audited, it was the year that they were transiting. So the full picture of how ComEasy can perform for the purposes of reporting, we are yet to see it in the 2021 financial year, because that migration is understanding it was only happening in the year. But as the AGSA, we didn't wait up until that process is completely finalized. We already started to test some of the control within ComEasy in preparation for the full reporting of 2021. And we've given management our feedback in terms of what are the areas that they can improve on, even before they use ComEasy to report. So for the financial year 1920, there was still a reliance on the previous system, including some of the manual intervention that we have been doing. ComEasy full performance is supposed to come play itself in the financial year 1920 and not in 2021 financial year. So the reflections that we've done and shared with management as part of the implementation, we've given it over to them so that they're able to attend to it before we issue the audit report for 2021, where the easy performance should then take a center stage from our side. If I can just allow Michelle to please respond to and just reflect on the comment made by Honorable Hinana on the remedies. Thank you so much.
Thank you. Thank you, BE. I'll just reflect on that comment to say what must be done. Just going back and also looking at everybody's roles and responsibility and what we call assurance providers, so the role players that are responsible in each area. When we do the audit and an action plan is developed, it is required that each assurance provider should perform their duties and make sure that that action plan is implemented and it's effective. So we then give the management report. Management then develops an action plan. The action plan must address the root cause. And if you look at that that area where management must then go and implement, there should be internal audit and an audit committee that then oversee that action plan is effective. And then there should also be that leadership that also oversees the effectiveness of that action plan. In terms of the portfolio committee, some of the recommendation that we have provided is to say, obtaining that action plan and the progress on that action plan, and also requesting the assurance providers that give that assurance, your independent assurance providers like your audit committee and internal audit, to also give the committee that assurance that these action plans are being implemented, are effective. So the committee should then also obtain that quarterly feedback to say, are we going into the right track or are we not going into the right track? As well as this will be in conjunction with the investigations that are currently underway to say how far these investigations and that constant follow-up and monitoring that these investigations are being followed up on. And that is the importance also of having that internal audit and audit committee functioning effectively, and their recommendations also being implemented. Thanks, BE. I hope I've covered that one.
No, you did. I think in a nutshell there, Chair, we're just saying that what we say in the compensation fund and what we do, there has to be in sync. Just so the presentations that we are sharing in terms of the turnaround strategies and the progress, they're in sync with the evidence on the ground. Until such time that those two are totally in sync, there will always be this juncture between what we say and what we can actually witness with the documents on the table. Thank you so much, Chair. Thank you for an opportunity. We will pause it here.
Okay. Can I just ask, and you will pardon my ignorance. Compensation fund has been in this state for 10 years. As you have been doing audit, I'm of the view that at some point, as the auditors, you are to have an interaction with the board. I do understand that the board is an advisory board, is not an executive board that has got an executive status. But is there, I'm saying, what do you do when the institution is at this state for almost 10 years, when they are people that are, in terms of, now I'm talking about the board, did you ever had that interaction with the entire board? Not really the audit committee. I just want to check with that. We'll check with you on that.
Okay. Thank you so much, Chair. You're right in saying the board is advisory. So as AGSA, we avail ourselves to everybody who may want to have access to us. But I do know that we engaged the board, particularly last year. I think they invited us. So we took them through the journey as we were experiencing it in the compensation fund. But I think in terms of what we do over the years, you would see that in the audit report for the compensation fund in particular, we have a paragraph that we included where we said, if it wasn't for the legislation that is prohibiting the AGSA from almost disconnecting themselves from any entity, because in line with the audit standards, if I continuously come to audit you and you're not giving me the reliable information, I'm allowed to withdraw my audit team. But within the legislation that governs the AGSA, we're not allowed to do that. So we put it in their audit report that if it wasn't for the legislation, we would have actually withdrew from the engagement of the compensation fund, just so that we don't continuously just go through the motions of the audit and put the recommendation on the table that we believe they're not getting traction. But as it stands, we would have engaged. I think we know we have quite a good session with the minister recently as well, in terms of what our proposals are, having reflected on the 10-year journey. So directly the board, yes, we engage them. I know last year we had a full session with them.
We lost you. I don't know.
Okay, I think I cut.
Yes.
Yeah.
You cut when you're saying you
I
had
think,
an interaction with the minister.
No, yes, we said we had a good session actually, I think with the minister, just particularly on the compensation fund recently, just almost opening the whole 10-year journey and just reflect on some of these things that we believe they can be unlocked if we just have a concerted effort in terms of what we want to drive. Primarily just the posture that does not tolerate poor performance or non-performance for that matter. And I think we're hoping that from those sessions that we're having with the ministry as well as the DG and management of the compensation fund, they will start to get traction. But in terms of what is yet to happen, we yet to see it as well. The board in particular, Chair, I was saying, I just don't know if you got me there, that we did have a full session with them. I know last year they invited us and we took them on the journey and the reflections. Thanks.
Okay. Thank you very much. I think, honorable members, there is the picture. We will, the office of the chair will communicate with with members in due course on what then will be the next step, so that we really see what if check if it's going to be possible that before we rise, we have some, we do call the department and these entities and the leadership of the department to the minister and the DG and the leadership, sorry, and the leadership of the compensation fund and the UIF. And I think this it's something that we really had to exhaust our energies, because this is not about anything else, but is to ensure that the monies that they are using, with the understanding that they don't get fiscus from government, they get fiscus from levies that they collect. But those are also, we have got the responsibility of protecting whatever cent that is administered by our entities. There are a number of things that have been raised that are quite alarming. Maybe when we are to call these entities, they will then have to unpack what exactly is being said, has been reflected by AG. I'm a bit concerned about the human resource. I'm really concerned about the human resource because it means that the department or whoever is paying is not getting value for money. And it can't be. It can't be. And therefore, we will really have to apply our minds. We manage our emotions. Yes, the the matter is challenging and emotive. But we've got that responsibility of ensuring that when we table whatever recommendation we are going, whatever report that we are to table in the House, it's a report that all of us are saying we are committed to. Obviously, we'll have different views. We've got different views. There are many people in the space that have got an interest in particular of the compensation fund. Our responsibility is to rise above that and say, what is it that we think is to be done? And that is to come from ourselves. The AG had the recommendations. We'll have to look into those recommendations. We'll have to look to the recommendations of the SCOPA, and we'll have to look into that and go where equals dare. That's the bottom line. We go where equals dare. Otherwise, we will be judged very harsh by history. It's 10 years now that we've been seated with this. And we must, if we say so well, it's 10 years, what's the big deal? I'm just making an example. I'm not saying that's what we're saying. We can't do that. We are to go where equals there. We will come back and see. I think it's going to be important and necessary that we come back and have a day's meeting to go through these things with the fine comb. Because the plan, the compensation fund did say that they've got a plan, but it seems as if it's a plan that is not responsive to the immediate challenges. But it's fine. We will discuss when time is here, when time, and in that meeting, AG, we will invite you to. We will really invite you to. Thank you very much, honorable members. Unfortunately, we have to miss the joint sitting of one of very important debates about the Constitution, but also this is also very important for us because we are to conduct our oversight, which is our constitutional responsibility also. Thank you very much, and sorry for missing that debate. Until we meet again next week on Wednesday, when we'll then be getting a response from the department on the issues that have been raised by people who came on COIDA. Please, good people, tell your friends the correct thing. The meeting on Tuesday, on Wednesday next week is going to be about us receiving responses from the department. We are not yet deliberating. We are not yet deliberating. We are not yet deliberating. Deliberation time is coming. People must be patient. And I hope the office of the chair is clear and people do understand. Thank you very much. Until we meet again, enjoy your weekend. Take care. Stay at home. Adhere to the 3 non-pharmaceutical treatments. Wear your mask, wash your hands, social distance, and if you are to go for vaccination, I was supposed to go today. I had to postpone it because of this meeting. So I must look into again the other time. Until we meet again, let's meet next week. Honorable members, enjoy your weekend. Bye. Our meeting is adjourned.
Thank you very much, Chairperson, the officials and all the colleagues.
Thanks, you too, Chair. Enjoy your weekend.
Thank you.
Thank you so much, Chair.
All right, thank you, thank you.
Thank you.